We are on value of supply, where we are going to discuss section 15, correct? Okay, section 15 scope is very limited, where two conditions must be satisfied. One is price shall be the sole consideration, and supply between unrelated persons. That means supplier and the recipient of supply shall not be related, unrelated person. Okay, so value of supply made to unrelated person with the price as the sole consideration. Then we have to check inclusions from value of supply and exclusions from value of supply, and discount has to be taken care. If these are discussed, then this chapter is over. Okay, see here. So value of supply, GST is payable on supply of goods or services or both for a consideration in the course or furtherance of business on certain supplies made without consideration as per Schedule 1 to the CGST Act. But supplies without consideration are there now. On that, how much is the GST amount cannot be told now, because it will be dealt with the rules, as the price is not the consideration here. It is free of cost now, without consideration. Price is not the consideration here, without cost. Hence, in that cases, we cannot determine the value, and thereby we cannot determine the tax also. So that will be dealt with in the rules. So only section 15 is applicable only when the price is the sole. See here, subsection 1 of section 15 provides mechanism for determining the value of supply which is made between unrelated person, and when price and only the price is the sole consideration for the supply. In such cases only we will go for section 15. Okay, so we will go for valuation of the value of supply. So whenever the price is not just the consideration, it may be consideration in kind, or whenever the transaction is between related person. In such cases, the rules will be the CGST rules. CGST rules will be there for determination of the value of the supply. Okay, so we have already seen the definition of consideration here. Consideration plays a major role here. Why? Because consideration is nothing but the value. Value is nothing but consideration. In such consideration, whether this discount has to be taken or not, whether this subsidy has to be included or not, whether this incidental expenses has to be included or not is the question here. Okay, right. See, consideration, it is a payment in money or otherwise. That means consideration in kind also to be considered for the supply. Okay, it is a monetary value of any act or forbearance for the supply by a recipient or any other person. And we already told that in consideration, the deposit amount shall not be considered generally if the deposit is appropriated. Like if it is appropriated to the supply, then it will be taken. So deposit to be considered as a payment only when the supplier applies such deposit as a consideration for the supply, and it shall exclude subsidy given by the central government or state government. If subsidy is given by central government or state government, then it is not consideration. It is not included in consideration. If it is by others, then it will be included in the consideration. It will be a part of the consideration, subsidy. So this is what the definition of consideration. Okay. So next we'll see section 15 here, value of supply, where we have to understand subsection 1, subsection 2, and subsection 3 mainly. Subsection 1, subsection 2, and subsection 3. These are the three subsections which we need to understand. 4 and 5 are there, no? It is just see here, as may be prescribed. That means rules. So if we are not able to determine value of supply as per section 15 subsection 1, means we should go to the rules. Okay, it will be there. Okay, right. So now we will go for section 15 subsection 1. Section 15 subsection 1. Right. The value of the supply of goods or services or both. Value of the supply of goods or services or both. Okay, shall be the transaction value. Transaction value. So transaction value means at what price the transaction is happening, the supply is happening. That will be the value. At what price the transaction is taking place, that will be the value. Okay, let's say the product is 1 lakh rupees worth product, but it is given at 10,000 rupees. That will be the value. Okay, right? See, which is the but we can take 10,000 as the value of the product. We can take 10,000 as the value of the product, but only when the price is the sole consideration. Only when the price is the sole consideration and the transaction is between related persons. See here, which is the price actually paid or payable for the said supply of goods or services or both, where the supplier and the recipient of the supply are not related, and the price is the consideration, sole consideration. So when price is the sole consideration and supplier and recipient are not related persons, then what is the value of supply? Value of supply is equals to transaction value. Value of supply is equals to transaction value. Transaction value means at what value the transaction is taking place. That we have to see. That we have to take as value of supply. So it may be higher value or it may be lower value. Just like that, if the friend is coming, we are giving it a discount. If an unknown person is coming and he is ready to pay much higher amount, we will charge that amount only. On that only GST will be levied. See, 1 lakh is the general worth of the product. Somebody is coming to you who is your friend. That's why you are charging 90,000. On this 90,000 GST. 90,000 is the value. On this 90,000 GST will be collected. If somebody is coming, one unknown person is coming, he don't know the quality of the product, he don't know regarding the price of the product. That's why he is willing to pay 1,20,000. You are collecting 1,20,000. You are taking or charging 1,20,000 because he is giving, you are taking. So on this 1,20,000 GST has to be levied. GST has to be applied. That means 1,20,000 will be the value. See, whenever the price is the sole consideration, see why I am taking the example of friend. Friend will not be covered under the definition of related person. Actually, the utmost related persons will be friends only, but it will not be covered under the definition of related person. It cannot be covered also. Okay, right. See, if we are giving to your friend at 90,000 rupees, 90,000 rupees will be the value. If you are giving at 1,20,000 rupees, 1,20,000 rupees is the value. Okay, so the market value need not be considered here. Market value need not be considered here, provided two conditions must be satisfied. One is price shall be the sole consideration. There shall not be any other consideration. There need not be any other consideration in kind. If there is a consideration in kind, then section 15 will not apply. Consideration in kind is there means section 15 will not apply. Even if part consideration is cash, part consideration in kind means, then also section 15 will not apply. So only price will be the consideration, means price is the sole consideration, means 15 will apply. And that too, supplier and recipient shall not be related persons. If those are related person means again section 15 subsection 1 will not apply. When we will take transaction value? When the transaction is between unrelated persons and the price is the sole consideration. If these two conditions are satisfied, then only you can go for section 15 subsection 1. Okay, so this is the thing. So 15 subsection 1 is telling that the value of the supply of goods or services or both shall be the transaction value, which is the price actually paid or payable. Transaction value means price actually paid or payable. When it is a credit sale, payable. When it is a cash sale, paid. Okay, for the said supply of the goods or service or both, where the supplier and the recipient of the supply are not related and the price is the sole consideration. You got this? Right. Now we are moving to subsection 2 of section 15. Okay, subsection 2 of section 15. In this 5 clauses are there. So which talks about inclusions to the value. Inclusions to the value. Next we will talk about section 15 subsection 3, where it will talk about exclusions to the value. Exclusions to the value. And these two subsections are there. Okay, na? So inclusions under section 15 subsection 2, exclusions under section 15 subsection 3. So this is exclusions from value of supply. This is inclusions from value of supply. Inclusions may how many clauses we have? Clause 1, A, B, C, D. Okay, 5 clauses are there. So 5 clauses are shall be discussed now. Okay, so the first clause will start. So the value of the supply shall include, any taxes, duties, cess, fees, charges levied under any law for the time being in force other than this act. Other than this act means taxes levied under any law other than this act, means excluding GST, any other tax levied on such good or levied on such product, then that has to be included in the value. Any tax. Okay, right. So the State Goods and Services Tax Act, the UTGST Act, and the GST Compensation Cess Act, if charged separately by the supplier. See, if the GST is charged separately, it may be CGST, it may be IGST, it may be SGST, or it may be UTGST, or it may be cess, whatever the amount which is levied as per this act, that shall be excluded. That shall be excluded. So that will be determined based on the value only, no? GST amount will be determined based on the value. So in that value, GST need not be, shall not be included. See, if 1 lakh is there, is the value, 1 lakh is the value, GST will be 18%, 18,000. So for this value, 18,000 shall not be added. On this 1 lakh only 18% has to be applied, and 18,000 will be arrived. Okay, so GST shall not be added. If any other tax other than GST, if any other tax other than GST, if any other tax other than GST means, you can see this, so you know this TDS and TCS provisions of income tax. TDS and TCS provisions of income tax, and sometimes there may be a tax, municipal tax. There may be municipal tax. Okay. See, if you are renting a property, so renting a property at 6 lakhs, okay, so rent. So municipal tax levied at the rate of 5%, okay, 30,000 rupees. 30,000 rupees. So totally it is 6,30,000 rupees. Now the value will be 6,30,000. So why the municipal taxes has been added? It is a tax levied by the local authority, and it is a tax not as per the GST Act. It is not GST. Other than GST, there is a tax. That's why we are adding this 6,30,000. On this 6,30,000, GST will be applied. GST at the rate of 18% on 6,30,000. So any tax other than GST shall be added. It may be tax, it may be cess, it may be charge, whatever it may be. So that has to be added. Okay. See, this TDS is there. So whenever, let's say, a CA is putting a bill to a client. Okay, CA is there giving a tax invoice to client. Okay, so let's say audit fees 1 lakh. Okay, on this GST at the rate of 18%, how much? 18,000 rupees. 1 lakh 18,000 rupees is the bill. Okay, how much they will pay? How much they will pay you? In the books of the accounts of the company, client is a company. In the books of accounts of the company, what will be the entry for this? You just tell me. Auditor. Let's say I am the auditor. CA Ram is the auditor. Okay, what will be the entry? You just tell me entry in the books of the company. What will be the entry? CA Ram account debitor. Okay, to bank while making the payment. Okay, you told me the payment entry. What is the amount? You tell me. What is the amount? You tell me. Payment entry you are telling. First you tell me the journal entry. Okay, journal entry you tell. Journal entry you tell me. Journal entry. A simple entry, no? Journal entry, how much? Audit fees, how much? 1 lakh, 1,18,000. 1 lakh? 1 lakh, 1,18,000. 1 lakh. Okay. Input GST 18,000. Okay, to CA Rama, how much? 1,18,000. Okay, here see there is one thing called TDS. This is a professional fees of 1 lakh. Income tax under section 194J, they have to deduct 10% TDS. So this TDS amount will be given to me. Huh? They will not give. How much they will give? 90,000 only. 90,000 along with the GST. 90,000 plus 18,000. How much? 1,08,000 they will give. I am putting the bill for 1,18,000 including GST. They will not give that much. How much they have to give? So they have to give me 90. See, out of 1 lakh professional fees, 10% TDS, 10,000. So that means 90,000 is the fees which they have to give me, plus GST they have to give me. So how much they have to give me? 1,08,000 they have to give me. Correct? 1,08,000. Remaining to TDS payable. How much? 10,000. This is the entry. Now the payment entry. The payment entry will be CA Ram. How much? 1,08,000. TDS payable. How much? 10,000. While you are making the payment of TDS, 10,000. To bank, how much? 1,18,000. Totally they will pay. So if they are making the payment at once, if they are making the payment TDS on some other occasion, or they are making the payment of audit fees on some other occasions, means they will do what the entry, this entry will be split. Okay, CA Ram 1,08,000 to bank. Okay, later TDS payable 10,000 to bank. 2 entries will be there. That is the payment entry. So this is how the entry will be passed. Okay, so why this discussion has come? This 10,000 rupees TDS they are not paying to us. They are not giving this 10,000. They are just paying me 90,000 plus GST. But still, what will be the value? What will be the value? 1 lakh. Including GST will be the value. Including GST will be the value. Okay, this is with respect to TDS. So TDS means TDS will be included in the value of supply. Correct? TDS will be included in the any tax other than GST will be included in the value. Okay, right. So we have TCS. TCS will be supplier is there, recipient is there. Okay, supplier is there, recipient is there. So let's say from recipient to supplier, consideration shall be given. Supplier to recipient, goods has been given. Goods worth 1 crore. 1 crore. Goods worth 1 crore. In this case, TCS will be applied. TCS will be applied. Let's say, forget about this. Okay, supplier is there. He is a car dealer. He is a car dealer. Recipient is a customer who is purchasing a car worth 1 crore. Okay, 1 crore. So on this, TCS is there. TCS is there. TCS at the rate of 1%. When you are purchasing a motor vehicle more than 10 lakhs, TCS will be applicable at the rate of 1%. So how much they have to collect? Supplier has to collect 1 crore plus 1%. See, I'm just see on RTO insurance, ex showroom price will be there. No, on that ex showroom price only TCS will be applicable. But for the sake of understanding, just we are taking on 1 lakh 1 crore rupee. Okay, on 1% means 1 lakh. So he is collecting. Let's say this 1 crore only ex showroom price. So ex showroom price 1 crore. Okay, 1 crore. TCS at the rate of 1%, 1 lakh. Others, other taxes. Other taxes means you will find insurance, road tax. Okay, let's say these are 25 lakhs. Okay, so on road price how much? 1 crore 26 lakhs. GST at the rate of 28%. Cess at the rate of 22%. Both will be levied. Almost 50% will be levied. 50% means 1 crore near about 1 crore 80 lakhs it would come. Okay, na? See, this TCS at 1% is there, no, 1 lakh. Actually, on this 1 lakh, GST shall not be applicable. So, this 1 lakh rupee shall not be considered for value. If it is TDS, then it shall be taken into the value. If it is TCS, it shall not be considered for calculation of GST. Okay, if it is TDS, it shall be considered. If it is TCS, it shall not be considered. Okay, so this is what section 15 subsection 2 clause A, inclusions to the value of GST. So any taxes, duties, cess and charges levied under any law for the time being in force, whatever it may be, then that shall be included in the value except GST amount. Okay, next point we'll see. Any amount that the supplier is liable to pay in relation to such supply but which has been incurred by the recipient. What they are telling? The supplier is liable to pay. That means, so we are purchasing goods from a particular supplier. Okay, as a recipient, we just need to pay the consideration to the supplier. Okay, so if at all there is any special, let's say, he will be giving with a basic packing. Supplier will be giving with a basic packing. For that packing also he has to give it to the third party. Packing will be done by the third party. So he went to the third party. So packing has to be done from the third party. To the third party, supplier has to pay consideration for packing. Packing charges will be paid by the supplier. That is the obligation of the supplier. But the packing charges has been paid by the recipient. So here the supplier is under obligation to pay such amount, but the recipient has paid the amount. Why the recipient has paid the amount? Supplier is making some delay in payment. That's why he is not packing it. That's why he is not delivering it. So in order to get it in a faster way, so he has paid the amount. Who has paid the amount? Third party has paid the amount. He can adjust that amount in consideration payable to the supplier. So in such cases, the amount which has been paid by the recipient to the third party, which is the obligation of the supplier, okay, that will be included in the value of supply. So let's say this is the 1 lakh worth of goods. Packing charges are 10,000. Okay, most important 10% is the packing charge, 10,000. So this 10,000 has to be paid by the supplier, and total 1,10,000 has to be collected from the recipient. But what had happened here, this 10,000 has been paid by the recipient to the third party on behalf of the supplier. Actually supplier has to pay, but he has paid it. In such cases, this 10,000 has to be added to the value of 1 lakh. Ultimately 1,10,000 will be the value. Okay, right. So any amount that the supplier is liable to pay, first of all, supplier is liable to pay that amount, okay, in relation to such supply, but which has been incurred by the recipient. Supplier is liable to pay, but recipient has paid it. So the supply, and not included in the price actually paid or payable for the goods or services or both, shall be included. Okay, the value of the supply shall include any amount the supplier is liable to pay but paid by the recipient. You got this point? Okay, so we will have some example or discussion in this. See here, section 15 subsection 2. So all the clauses are given here. Taxes and duties, payment to third parties. These two clauses we have discussed now. Okay, so other three are there, we will discuss. So taxes and duties, cess, fees, charges, and other than CGST, SGST, UTGST, GST compensation cess if charged separately. Okay, so this is taken. Next, payment to third parties, any amount that the supplier is liable to pay in relation to supply but which has been incurred by the recipient of the supply and not already included in the price. So packing charge is already included in the price, means if it is paid by the recipient also, we will not include again. See, this is here the value is 1 lakh, packing charge is 10,000. So that means packing charge is 10,000 separately shown and it is not included in the value. So that's why we are including the value, because it is paid by the recipient. Okay, right. So with respect to TCS, see here, tax collected at source under the provisions of Income Tax Act 1961 would not be included as it is an interim levy not having the characteristics of tax. Okay, so that's why it will not be taken. Next, payment made to third parties by recipient on behalf of the supplier in relation to the supply, which is 15 subsection 2 clause B. Okay, payment made to third parties by the recipient on behalf of the supplier in relation to the supply. Okay, actually the obligation is of the supplier, but the recipient is paying. Okay, in such cases a supplier may need to incur various expenses to make a particular supply. In the normal course, he would pay these amounts and they would form part of the price that he charges from the customer. Obviously, if he is incurring some expenses, means obviously he will charge from the recipient. But what is happening here, however, if the customer makes a direct payment of such of the sum of such liabilities of the supplier to the third parties, and the supplier does not include this amount in the bill. Okay, supplier is not including such amount in the bill. See, 1 lakh is the value, 10,000 is the packing cost, but this 10,000 rupees packing cost has been paid by the recipient directly to the third party. Okay, and hence supplier is not billing this 10,000 and asking for 1 lakh only through the bill. Supplier is just asking for 1 lakh through the bill because 10,000 has already been paid to the third party. So in such cases, along with this 1 lakh, 10,000 has to be included in the bill. So totally value will be 1 lakh 10,000. On this 1 lakh 10,000 only GST has to be levied. So what the government intention here is, so even though the third party making payment to the third party, that shall be included in the bill, GST has to be paid on such amounts also. GST has to be paid on such amounts also. So it will still form part of the value of supply. Okay, a point to note here is that amount paid by the recipient of the third parties will be added to the value under this clause only when the supplier is under obligation, contractual liability. So if the supplier is having liability, but the recipient is paying, then only that amount has to be added. If the supplier is not having obligation, it is not the supplier generally who pays the packing charges, let's say. So in such cases, that will not be added in the value. So if the recipient wants a special packing, after delivery, he is going to a special packing. In such cases, it is a different supply. Okay, right. So supplier is under obligation to contractual liability to make the payment to such third parties, and the said payment is in relation to such supply. In such cases, only we have to take into the value. So see here the example: Grandbridge contracts with ABC companies. Grandbridge is contract with ABC companies. Okay, to conduct a dealers meet. In furtherance of this, Grandbridge contracts with vendors to deliver goods or services like water, soft drinks, audio system, projectors, catering, flowers, etc. So Grandbridge is there. So he is the event organizer. Okay, he is the event organizer. So event organizer is getting supplies from whom? Outside caterers. Okay, water, soft drinks, audio system, projector, catering, flowers, etc. So from outsiders, they are taking some goods, some services. Okay, to this outsider, who is making the payment? ABC company is making the payment. Who has to make the payment? Actually, Grandbridge has to pay. So we just talk to Grandbridge on a contract basis. We have given a lump sum amount to them. So they have to arrange each and everything there. But they are under obligation to pay to outsiders. Okay, but who is paying here? ABC company. See, Grandbridge is liable to make these payments as contracted. The soft drink supplier wants payment upon delivery. So ABC company agrees to pay the bill raised by the soft drinks vendors on Grandbridge on receiving the crates of soft drinks. This amount is not billed by Grandbridge to ABC Limited. Why it is not billed? It is already paid. It is already paid. By whom? ABC company. To whom? Soft drinks. Okay, soft drink wala. So in such cases, they no need to get this payment again. That's why they are not billing this. So even though they are not billing this, they have to include this value. Why they have to include? In order to levy GST. Okay. So the amount is not billed by Grandbridge to ABC company. Why they are not billing? Actually, it has been already paid. So however, it would be added to the value of supply provided Grandbridge to ABC Limited for the payment of GST. Okay, so you understand this point, right? So now we will move to section 15 subsection 2 clause C, where we are talking about incidental expenses. So in incidental expenses like including commission, packing charged by the supplier to the recipient of a supply, and any amount charged for anything done by the supplier. in respect of the supply of the goods or services or both at the time of or before the delivery of the goods or supply of services. So anything done by the supplier at the time of supply. So whether it may be packing, whether it may be commission, whatever it may be, so which the recipient is asked for. So recipient is asking for a special packing. That special packing is being made by the supplier himself. In the last case, what we have taken, the packing will be made by a third party. To the third party, recipient has paid. So in this case, what is happening? Special packing will be made by the supplier himself. Okay, the cost of the goods plus packing charges, both will be included in the value. Both will be included in the value. So if a commission has been paid to some agent, it may be a purchase, it may be a buying agent, or it may be a selling agent, whoever it may be. So if the supplier has to pay GST, selling agent, let's say, for supplier, selling agents will be there. So supplier has to pay it to selling agent. So in such cases, the amount of commission paid to the selling agents will be added to the cost. Value of the supply. Okay, so incidental expenses, including commission, packing charges, whatever it is incidental. So before or at the time of supply, whatever the recipient is asked for, that has to be included in the value. Okay, right. So incidental expenses, we will have some examples here. Incidental expenses, you can see here. So 15 subsection 2 clause C, 15 subsection 2 clause C. So incidental expenses such as commission and packing charged by supplier or anything else done by the supplier in relation to supply at the time or before the delivery of the goods or supply of services must be added to the value. See, commission, packing, inspection or certification charges. Inspection or certification charges. So inspection is made from a third party. Next, installation and testing charges. Installation and testing charges. Weighment charges. Loading charges. Designing charges. Incurred before or at the time of supply. So we just not want the goods to be delivered. We want a logo to be printed on it. So that is also supplied by a supplier. So that is also incidental expense. So we just not want the delivery of the goods. We want installation of the goods. We are booking some gym equipment that has to be come to our place. The goods has to be delivered to our place and the equipment has to be installed in our site, in our place. So in such cases, whenever there is an incidental expense, that incidental expenses, incidental charges has to be added to the cost. Let's say delivery expenses will be there, freight cost, delivery charges. So we want the goods to be delivered to our place. Okay, supplier has seen a goods transport agency. He has paid some courier charges. Okay, courier charges. So he has paid, supplier has paid. So supplier billed us. Okay, so that shall be included in the value of supply. So whatever the incidental charges, whether it may be delivery charges, whether it may be incidental charges, whether it may be installation, packing, commission, whatever it may be, so those has to be added to the value. Incidental expenses. Okay, right. So next, see here, outward freight transit insurance. Outward freight transit insurance. So actually, where the supplier agrees to deliver the goods at the buyer's premises and arranges for transport and insurance, the contract of the supply becomes composite supply. Obviously, supply of goods plus supply of service. Okay, supply of service. Principal supply will be supply of goods. Principal supply will be supply of goods. So totally will becomes the value of supply. On this value, GST will be applied. Okay, so being the supply of goods. Therefore, outward freight and transit insurance becomes the part of the value of the composite supply. GST is payable thereon at the same rate as applicable for relevant goods. However, if the contract for supply is on ex-factory basis, contract for supply is on ex-factory basis, that means goods will be delivered at the factory premises itself. So the transit will be the responsibility of the recipient. Transit will be the responsibility of the recipient. In such cases, where the buyer pays the outward freight and insurance, buyer pays the outward freight and insurance. That means transporter GTA has been booked by whom? Recipient. See, from let's say from Karnataka, goods has to come to Hyderabad. From Bengaluru to Hyderabad, goods has to come. So the supplier is supplying goods at his factory. So we are arranging the transport. So in such cases, we will pay our GTA. We will pay our transporter. That means we are purchasing goods from a Bangalore dealer. Okay, that is a separate service, and we are paying the delivery charges to a separate goods transport agency. That is a separate service. Supply of goods from the dealer, supply of services from the goods transport agency. This is separate. So whenever you are paying transportation charges to a third party, who is paying, recipient is paying to a third party, that will not be included in the value. This is a separate thing. So this may be a reverse charge mechanism case. So whenever you are taking services from GTA, based on the GTA, it may be a reverse charge. So if the GTA is not willing to take up forward charge mechanism, you have to pay GST. That is a separate thing. But whenever it is the obligation of the supplier and supplier is charging for transportation, in such cases the transportation charges has to be included in the value. So if the transportation is not the obligation of the supplier and transportation is arranged by the recipient, for that recipient is paying separately to the transporter. In such cases, that is a separate service. It is not included in this. It is not a composite service. Okay, right. So the same will not be included in the value of the goods. You got this point correct? Okay. Next comes 15 subsection 2 clause D. So we have seen three clauses A, B, C. First clause is with respect to taxes. Taxes other than GST has to be included. Second clause is with respect to any amount paid by the supplier. Recipient to the third party, but which shall be paid by the supplier. So that means supplier is under obligation to pay such amount. Supplier is under obligation to pay such amount, but has been paid by the recipient. So that amount has to be included in the value. Okay. Third point is incidental expenses. Incidental expenses. It may be packing, it may be commission, it may be or it may be inspection, or whatever it may be. So those charges, vehicle charges, installation charges likewise. So what testing charges likewise. So whatever it may be, if it is incidental, those has to be included in the value of the supply. Okay. So if sometimes it is the obligation of the recipient to incur such expenses and the recipient is paying that amount. It is the obligation of the recipient and the recipient is paying such amount. That will not be included in the value. Only which will be included, supplier's obligation amounts will be included in the value. Okay. Right. Next, fourth point is 15 subsection 2 clause D. Fourth point, interest to late fees penalty for delayed payments. Interest to late fees penalty for delayed payments. So delayed payments, when the delayed payments will be there? Generally in the case of credit sales. So we are expecting the payment in 1 month. If it is not given, so 2% interest per month will be charged. That is the clause there in the invoice. Under terms and conditions it is there. So whenever you are receiving such amount, of interest, let's say 10 lakhs is the value of the product. Okay, 2% interest. So there is a delay of 3 months. How much the delay of 3 months? How much amount will be the interest? How much? 3 months delay. 6% means 60,000. 60,000 interest will be there. So if you are charging such interest, so on that interest will also form part of the value. But here we don't know that whether this interest will be there or not. There is a case, there may be a chance that he will be paying. There may be a case he will be paying on the right time. Okay. So then how can we include in the original value? So for that, so in GST there is no, so whenever you want to make an addition to the value, or whenever you have to make a deletion or subtraction to the value, so you have to issue the debit note to credit note. Whenever you want to increase the value, whenever you want to increase the tax, whenever you want to increase the value to be increased or tax to be increased, so in such cases you have to issue debit note. It is from the point of view of the supplier. From the supplier point of view, it is debit note. That means he is debiting the customer. Okay, that means the customer still has to pay him. Likewise, so if the value has to be increased or tax has to be increased. Okay, right. But when the value has to be decreased or tax has to be decreased, from the point of view of the supplier, credit note has to be issued. Purchase returns are there. Then which note? Purchase returns are there. Which note? Credit note from the point of view of the supplier, purchase returns. From the point of view of the supplier, it is always sales returns, correct? From the point of view of the supplier, it is always sales returns. Okay. So if you are selling goods already sold to a customer is selling, returning the goods. In such cases, you will issue, value has to be reduced, right? When the goods are returned, value has to be reduced, tax has to be decreased. In such cases, what has to be issued? Credit note has to be issued in order to decrease the value or decrease the tax. Sometimes actually the rate of GST is 12%, but we charged 18%. In such cases, tax has to be decreased. Okay, what to issue? Credit note has to issue. Okay, from the supplier point of view, credit note has to issue. Okay, from the supplier point of view, in order to increase the value or in order to increase the tax, debit note has to be issued. Right. See here, interest is 60,000 in this case. After 3 months only we are getting to know it. Now what you have to do? You have to issue a debit note. Charging 60,000 as the value of supply. So 60,000 is if you are receiving just 60,000 rupees from the customer as an interest, this 60,000 includes GST. Let's say 18% is the rate of GST. Then in this value will be 100 by 118. Value will be 100 by 118. How much? How much? 50,440. 847. Okay. 50,847. This is 900. 18% will be 9,000. 8,000. 8,000, 9,000. 153. 9,153. So will be GST. So 60,000 will be the invoice amount or invoice value. Okay. So whenever there is a lump sum amount, there is no separate GST on it. So whatever the amount you have collected, that will be inclusive of GST. So here, so 9,153 will be the GST amount. Okay. So you have to issue debit note. This is not a separate supply. So but this has to be included in the value. But you will not be knowing that whether this interest will be coming or not. You will not be knowing. Whenever you are receiving such interest, then only you have to pay GST. Okay, then only you have to pay GST. Okay, so by issuing the debit note, value will be value of the supply will be collected. Okay, next, see, you got this interest, late fees, penalty for a delayed payment, whatever it may be. It may be penalty, it may be interest, or it may be late fees collected for delayed payment of any consideration of any supply. So supplier already supplied goods or supplied already services, but there is a payment pending from the recipient side. So whenever the payment is pending, he is charging some interest for a delayed payment. On that interest also GST shall be levied. Okay, so how the GST will be levied? If it is considered as a value, then only GST will be levied. So that's why it shall be added to the value of the supply. How it shall be added to the value of the supply? When it is happening at a later date, at the point of supply, at the time of supply, you cannot know. Okay, so in such cases, so it will be added by giving or issuing a debit note. Okay, right. Next, subsidies. Section 15, subsection 2, clause E, subsidies. Okay, so the subsidies directly linked to the price. Excluding subsidies provided by the central government and state government. So subsidies directly linked to the price, excluding subsidies provided by central government and state government. Included or excluded? Excluded. So that means they are telling that as per section 15 subsection 2 clause E, subsidy. Okay, so subsidy by government, central government or state government, by others. Okay, by others. So if it is by central government, state government, excluded. Okay, excluded from the value of supply. Okay, excluded from value of supply. If it is others, then you need to check one more condition. You need to check one more condition. What is that condition? If it is directly linked to price, directly linked to price, that means lump sum subsidy is there. Lump sum subsidy is, see, subsidy from an NGO. If it is directly linked to price, if it is yes, then included. If it is not directly linked to price, then exclude. Correct? From that clause we can make this interpretation. See that clause. Subsidies directly linked to the price, excluding subsidies provided by central government, state government, and central government and state government. So if it is subsidy from the central government and state government, it is excluded from the value. Others means, let's say subsidy from NGO, a charitable trust. Okay, from an NGO. If directly linked to the price, if it is directly linked to the price, then it will be included. If it is not directly linked to the price, it will be excluded from the value of supply. You got this? Okay, right. So we will see some examples on this. Okay, see here, interest, late fees or penalty for delayed payments under section 15(2) clause D. The value of the supply will include not only the base price but also charges for delay in payment. Example, supply priced at 2000 is made, okay, with a credit period of 1 month for payment. Thereafter interest at 12% per annum is charged. The payment is received after lapse of 2 months, okay, from the date of supply. The amount of interest at the rate of 12% per annum, that is 1% per month on 2000 rupees for 1 month. After the free credit period of 1 month, rupees 20 rupees will be the interest. How much? 2000 into 1% per month into 2 months. Okay, 20 rupees, 20 or 40? 20 per month. Okay, 20 per month means 40 it shall be, right? 40 kada? 1% per month. How many months delay is there? The payment is received after lapse of 2 months from the date of supply. That means 1 month credit period is there, no? So there is a 1 month delay. That means 20 rupees is the amount of interest. So this 20 rupees also shall form part of value of supply. Okay. So such interest will be added to the value, and thus the value of the supply will work out to be 2020, assuming the interest to be exclusive of GST. Exclusive of GST. If you are assuming that, it is very important to give a note there. So note of an assumption. So even if you are having clarity also, see, if the question is mentioning that is a different thing. Like interest amount of 20 rupees exclusive of GST. That means question is mentioning like that, means you no need to make a mention. If the question is silent about that point, you have to give a remark there that this amount is exclusive of GST. It is an assumption karke. You have to give your assumption there. So it is always safer to write an assumption there. Okay, right. Okay, so the value of the supply will work out to be 2020, assuming the interest to be exclusive of GST. So this is 15(2)(d). Right. Now subsidies linked with price. Subsidies linked with price. Whenever it is a subsidy from government, then straight away excluded. Okay. If the subsidy is not linked, not given by the government, then you have to check. What you have to check? Whether it is received from the directly linked to the price or not. If it is directly linked to the price, then it will be included. If it is not directly linked to the price, it will be directly excluded. Okay. So subsidy is a sum of money given to keep the price of a service or a commodity low. Okay. The subsidy is added to the value of the supply of the supplier who receives the subsidy. The subsidy is added to the value of the supply of the supplier who receives the subsidy. Okay. Right. So it must be noted that only subsidies directly linked to the price of the goods or services are added to the value. Blanket subsidy or donation received are not included in the value. Okay, note that if the subsidy is given by the state or central government, it will not be added to the value. So let's say tractors are there. Okay, tractor is there. Okay, so when a farmer is purchasing a tractor, so let's say tractor value will be how much? Let's say it's 5 lakhs or 10 lakhs, 5 lakhs will be, okay. See, in this 40% subsidy given by government. Okay, so now the dealer has to charge 5 lakhs minus 40%. 2 lakhs, 2 lakhs, 3 lakhs will be there. On this will be the value of supply. This will be the value of supply, correct? This will be the value of supply. Okay. See, if this 2 lakh subsidy is coming from an NGO, 2 lakh subsidy is coming from an NGO. So in such cases, included or excluded? On 5 lakhs only GST has to be levied. Value of supply is equals to 5 lakhs. Right. See, if the NGO wants to really support the farmers. So that's why for 100 tractors, so they are giving, for 100 tractors they are giving 1 crore rupee lump sum. 1 crore rupees subsidies they are giving to a tractor dealer. Okay, because the tractor dealer is giving the price, giving the tractors at some discount price. In such cases, they are giving the donation in lump sum. In such cases, so the price will be included or excluded? Excluded. What shall be excluded? See, here also 5 lakhs. That means this 1 crore rupee amount of donation is there, no? On this amount of donation, there will not be GST. This amount of consideration, like donation, is also a type of consideration. It is not a supply. That is a different story. See, we have seen that in this. So whenever there is a charity, when there is a quid pro quo, then only it is a supply. So here consideration they have received. Okay, but there is no quid pro quo. So in such cases it is not a supply. See, on this donation amount there is no GST. Okay, so whenever it is a case of price or donation linked directly to the price, in such cases it will be taken care. See, what is this? Section 15 subsection 2 clause E, subsidy linked to the price. See here, the selling price of a notebook is rupees 50. For notebooks sold to the students in the government schools, a company receives price linked subsidy of rupees 30 per notebook. Company is receiving 30 per notebook, okay, from NGO, so that the students pay rupees only 20. The value of the notebook will be 50 because the subsidy is linked to the price, okay, price of each notebook. So that's why even though 20 is the actual consideration, 30 subsidy will be included, total 50. On this 50 GST will be charged. So whenever it is a lump sum donation, for notebooks you are to see, notebooks are given to the students at 50 rupees. No, you just give the notebook at 25 rupees. That's why I am giving you 10,000 rupees donation. Likewise, there is a lump sum donation, means on that lump sum amount of 10,000 rupees there will not be GST. On that lump sum amount of, so here what is happening? On 30 rupees subsidy also there is GST. On 30 rupees subsidy also there is GST. Whenever there is a donation in lump sum, means on that lump sum amount of donation there is no GST. Okay, he again on the price, actual price. So generally this 25 rupees they are charging. Value of the supply is 25 rupees. Why 25 rupees discount has given? They have received a lump sum donation of 10,000 rupees. That's why they are charging 25 rupees. So now the value will be 25 only. On the GST will be, on 25 only GST will be collected or GST will be calculated. Okay, why like that? They are having a lump sum amount. They are having a lump sum donation. So using that donation, they are giving the notebook at a discounted price. So if it is not directly linked to the price, in such cases, it is not directly linked to the price. If it is lump sum, in such cases, it will not be included in the value. Okay, so if it is directly linked to the price, in such cases, it shall not be, it will be forming part of the value. Okay, so right, so as per section 15 subsection 2, we have 5 clauses. So first clause is, we have 5 clauses. First clause is taxes, duties, fees, cess. Taxes, duties, fees, cess. Wherever you are charged with the tax other than GST, that shall be forming part of value. Okay, now that shall be forming part of value. TDS shall be included. Yes, shall be included. TCS shall not be included. Municipal taxes shall be included. Customs duty shall be included. Okay, so whatever the tax is there other than GST, that will be included. Okay, next, any amount that the supplier is liable to pay, but the recipient is paying. Supplier is liable to pay, but recipient is paying here. In such cases, that will be included to the value. Next, third point, incidental expenses like packing commission, weighment charges, installation charges, inspection charges. So likewise, any incidental expenses are there, so that will be included to the value. Next fourth point, D, interest, late fees, penalty or delayed payment. Okay, delayed payment, consideration for delayed payment or penalty for delayed payment. So that also to be included to the value. And lastly, subsidies from the central government, state government will not be included. Subsidies from the NGO, if it is lump sum, that will not be included. If it is directly linked to the price, then only it will be included in the value. Got this? Right. Okay. Next, we shall be talking about the exclusions. Exclusions as per section 15 subsection 3. Here there is an explanation. For the purpose of this subsection, the amount of subsidy shall be included in the value of supply of the supplier who receives the subsidy. Okay, so who is receiving subsidy, in the its value, it has to be included. Okay, next, the value of the supply shall not include any discount which is given. So subsection 3, section 15 subsection 3 is talking about exclusions. In that, especially we are talking about discount. So that means it is a exclusion, means discount amount. Exclusion means discount. So whether the discount has to be minused from the value or not. Okay, so actually the MRP of the product is 20,000 MRP of the product minus discount. You can directly find this in the invoice. In the bills, you might have seen this discount of 5%. How much? 1,000 rupees. Okay, 19,000 will be the value. GST will be on this 19,000 rupees. GST will be on this 19,000. GST will be excluding the GST will be on the value excluding discount. But there are certain conditions to it. So whenever the discount is fixed at the time of supply, and mentioned in the invoice. Whenever the discount is fixed in the invoice and mentioned in the invoice, in such cases that discount will be excluded from the value. Sometimes there will be some discounts which will be after the supply. Let's say a dealer is there, a businessman is there, who is your regular customer, has taken 1,000 units of product from you. 1,000 units of product from you. But there is a lack of demand to the product. That's why the business not happened well. So that's why recipient is reluctant to pay 100 rupees per unit. Now he wants to pay 95 rupees per unit. He is asking for 5% more discount. He has already taken a discount of 10% at the time of purchase. But later on, when the demand is not there, okay, all the buyers are asking him for 90 and 95 rupees. That's why he wants to pay 95 rupees only. So it is not known at the time of supply. So while making the supply, while making the sale, is not known. So supplier not known. but he has to receive, he has to accept 95 because he is the daily customer. He has to accept 95 rupees only. So now there is a decrease in the value by giving discount at a later stage. Okay, so at that time GST will be on 100 rupees or 95 rupees. On 100 rupees only, which is not known at the time of supply. Discount which is not known at the time of supply. See, discount is known at the time of supply and it shall be linked to a particular invoice, linked to the bill. Overall, this is, see, you have to, the customer is there, he is purchasing, every month he is purchasing from us. So almost 10 to 15 bills are there during a financial year. 10 to 15 bills are there. So there is an outstanding of 15 lakhs from him. There is an outstanding of 15 lakhs from him. So on this 15 lakhs, you are giving a discount of 1 lakh, you are asking to get the payment of 14 lakhs. On overall bills, you are giving a discount of 1 lakh rupee. On overall business, you are not linking the discount to a particular invoice. You are not linking the discount to a particular invoice, to a particular bill. So you have purchased this 1000 units on so and so date at this so and so price. So in this price, I am giving you 10% discount, 5% discount. Likewise, it is not linked. It is an overall discount. That too after the financial year or the end of the financial year. So in such cases, there will not be decrease in the value. There will not be decrease in the value. Okay, na? So only discounts which are linked to the price. Okay, so that means at the time of supply, if there is a discount mentioned in the invoice, that will be excluded from the value. If there is a post supply discount, that means after supply, after the sale, if any discount can be minused or subtracted from the value, can be excluded from the value, means conditions needs to be satisfied. What conditions needs to be satisfied? Discount shall be linked to the price. Discount shall be linked to the price. That is one thing. And at the same time, it should be fixed. It should be fixed. Discount shall be linked to the price. Discount shall be linked to a particular invoice. Linked to the invoice. At the same time, it shall be fixed at the time of supply. At the time of supply, it shall be known. Let's say 5% discount will be offered if you are making the payment within 30 days. Likewise, there is a terms and conditions. In the invoice only it has been mentioned. If you are making the payment, this is a credit supply. If you are making payment within 30 days, then you will be offered with a discount of 5%. So already we have given 10% discount. If you are making the payment within within a month, 5% extra discount will be given. In such case, it is known at the time of supply and it is linked to the particular invoice. In such cases, value of the supply minus this extra 5% discount can be done. Okay, so write what section 15 subsection 3 is telling with respect to discount means discount shall be excluded from the price, but upon satisfying particular conditions, then only discount can be subtracted or excluded from the price. Discount will be of two types. One is discount before or at the time of supply, discount after the supply. Discount will be of two types. Discount at the time of supply or before the time of supply, discount after the supply. Okay, so we will talk about discount before or at the time of supply in clause A, after the supply in clause B. Discount after supply in clause B. Right, so value of the supply shall not include any discount which is given before or at the time of supply. Before or at the time of supply. If such discount has been duly recorded in the invoice issued in respect of the supply. Duly recorded in the invoice means discount shall be mentioned in the invoice. That means price will be mentioned minus discount at the rate of 10%. Likewise, you can make a mention of the discount. So if you are mentioning that discount in the invoice, in the bill itself, then value of the supply will be excluding the discount. Value of the supply will be excluding the discount. Okay, if such discount has been duly recorded in the invoice issued in respect of supply. And if it is after supply, if the discount is after supply, okay, has been affected, if such discount is established in terms of an agreement entered into at the time of or before the time of such supply. Okay, so agreement shall be there. That means supplier agreed to give such discount to the recipient at the time of supply only. So if you are purchasing from me 10,000 units in this financial year, you will be offered the discount of additional 5%. Likewise, volume discounts will be given. Or if you are making early payment, then you will be offered 5% cash discount. So likewise, if there is an agreement at the time of supply for secondary discounts or post supply discounts, there is an agreement prevailing at the time of supply, then those discounts will be excluded from the value, okay, or before at the time of supply. And see, end condition is there. That means another condition is there. What is that? Specifically linked to the relevant invoice. Discount shall be specifically linked to the relevant invoice. It shall be linked to a particular invoice with respect to this bill, with respect to these many units at this price. So we have already told you. So in this bill, I am giving a discount of 5%. In this bill, I am giving a discount of 5%. Likewise, bill shall be identified. Bill shall be identified. If the bill is not identified, if it is an overall discount of the outstanding value, it is not decreased from the value. It is not deducted from the value, excluded from the value. Right. Next, another most important condition is that, see here, B2B, last discussion. We will have a break after this. Okay. B2B, okay, supplier is there, recipient is there. What is B2B? Business to business, okay, supplier is there, recipient is there. So you are selling goods worth 10 lakhs, GST at the rate of 18%. How much? 1,80,000 rupees. So at the time, this is a credit sale. So in the month of August, this is a credit sale. Okay, na? So now what will happen? Recipient is purchasing 10 lakhs worth of goods. He is paying, in this 1,80,000 rupees amount of GST is also there. So now recipient, what the recipient will do? 1,80,000 rupees GST will be claimed as input tax credit, correct or not? ITC will be taken. Okay, na? Input tax credit will be taken by the recipient. So what the supplier will do? He will pay, that means GST output, okay, will be shown as 1,80,000 along with other supplies. 1,80,000 rupees GST will be shown as output collected, 1,80,000. Based on this only he will make the payment of GST. What the recipient will do? He will take 1,80,000 input tax credit. He will take 1,80,000 as input tax credit, right? So now what is happening? We are talking about post supply discount. It is at the time of supply. In August month, it has happened like that. Now in the month of November, payment is made in 3 months. That means September, October, November. So by 30th November, payment has been cleared. So that's why the supplier is very happy. So and hence he is offering another 5% discount. Another 5% discount he is offering. In such cases, what is happening? The value of the product is getting decreased. That means on 10 lakh rupees, 5% means how much? 50,000. 50,000 is gain. So corresponding GST has to be decreased. That is 9,000. 9,000 GST has to be decreased. Correct? Okay. So for the supplier, the value to be reduced by 50,000 rupees. And GST to be reduced by 9,000 rupees, but entire 1,80,000 rupees has been taken as credit by recipient. 1,80,000, that means he is telling that 1,80,000 rupees I am liable to my supplier. That's why it can be treated as my payment of GST to my supplier. That's why I am taking this 1,80,000 as credit. He is telling in that way. Now what is happening? He is getting a discount of 50,000 rupees. On this 50,000 rupees, 9,000 rupees is a GST discount. So whenever the recipient is getting 9,000 rupees GST discount, okay, from the supplier, and the supplier wants to, see, supplier is telling that I have collected 1,80,000 rupees GST from my recipient. Likewise, he has paid the GST amount of 1,80,000 rupees by adjusting his input tax credit or making the cash payment, whatever it may be, in whatever it may. So he is already paid. So in order to get the discount of GST to the supplier, so recipient enjoyed the discount already. So that is what input tax credit already. That has to be reversed. So if the recipient is reversing the input tax credit claimed earlier, then the supplier will be receiving this discount of GST by reducing the value of supply. To an extent of discount of 50,000 rupees. You are getting this pointer. So whenever it is a post supply discount, 3 conditions must be satisfied. See, discount is there, discount at the time of supply or before supply. Okay, excluded from the value of supply if mentioned in invoice, in the bill. Okay, discount shall be mentioned in the bill. If it is post supply, that means after supply discount is there, means, so that will be, again we need to check the conditions. So it is agreed at the time of supply. Okay, next agreed at the time of supply. Next, it shall be linked to a particular invoice. Actually bill, in a general word, bill, but actually for us as a professional, it is a tax invoice. Okay, it is linked to invoice. And ITC, reversed by the recipient. If these conditions are satisfied, then what will happen? Excluded from value of the supply. Understanding this? Okay. So this is with respect to discount. 15 subsection 3. Okay. So if these subsection 1, subsection 2, subsection 3 are taken care, chapter is over. So these are the important provisions here. So section 15, subsection 1, subsection 2, subsection 3. Subsection 1 is value is transaction value. Value of the supply is equals to transaction value when price is the sole consideration and transaction is between the related persons. Non-related person, unrelated persons. Supplier and recipient are unrelated and price is the sole consideration, then value of the supply is the transaction value. This is 15.1. What has to be included in the value of the supply is 15.2. What has to be excluded from the value of the supply is 15.3. In 15.2, we have 5 different clauses. Clause A, B, C, D, E. What are the 5 different clauses? Clause A is taxes and cess, so other than GST, to be included. Okay, to be added to the value. Next, second point, liability of the supplier but incurred by the recipient, that has to be added to the value. Next, incidental expenses like packing, commission, etc. has to be added to the value. Okay, fourth point, interest, late fees, penalty for the delayed payment of the consideration shall be added to the value. Okay, fifth point, subsidies given by the persons other than central government and directly linked to the price shall be added to the value. Okay, if it is not directly linked, that means donation type, lump sum donation type, will not be added to the value. If it is from the central government or state government, it will not be added to the value of the supply. So this is 15 subsection 2 clause A. Next we are talking about discounts as per section 15 subsection 3. So discounts are of two types. One is discount at the time of or before the time of supply. Okay, so discount after the time of supply. So if it is at the time of supply, so discounts which are mentioned in the invoice will be excluded from the value. If it is a post supply discount, provided these conditions are satisfied, those discount will be excluded from the value. What are the conditions? So discount shall be agreed at the time of supply. It shall be linked to the price. And thirdly, input tax credit already enjoyed by the recipient has to be reversed. If all these three conditions are satisfied, discount amount given after the time of supply, post supply, will be excluded from the value of the supply. So this is what is the entire chapter of value of supply. That's all. Okay. So if some other miscellaneous things are there, means we will have a discussion on it after the lunch. Time of supply. We have questions in this. Numerical questions ఉంటాయి ఇందులో. Welcome back after lunch. Maybe within half an hour or 1 hour. 80. You might be going into sleep. Huh? Okay. Sorry. Now we are discussing value of supply. In that section 15 we are discussing. In that how many subsections we have seen? 3 subsections we have seen. 15.1, 15.2, 15.3. Correct? In that 15.1 what is there? 15.1. 15.1 value of supply is the transaction value provided price is the sole consideration and supply between unrelated persons, that means supplier and the recipient are unrelated, then transaction value will be the value of supply. Okay, so the value of the supply includes five different clauses. What is that? Any tax, cess, fees charged. Okay, next clause B. See, taxes means every tax other than GST, which is levied as per CGST Act, SGST Act, UTGST Act, Cess Act, whatever. So if it is levied means it is not comes under value of supply. Okay, so any amount that the supply is liable to pay in relation to the supply, which has been incurred by the recipient. Supplier is liable to pay, but recipient has incurred. Okay, so that amount, and any incidental expenses. Any incidental expenses including commission, packing charged by the supplier to the recipient, any incidental expenses. So the next point, D point, any incidental expense, packing, commission, installation, payment charges, whatever it may be. Next, interest, late fees, penalty for the delayed payment, okay, of consideration, that shall be included in the value. And subsidies linked to the government, subsidies directly linked to the price, not given by the government. If it is given by the government, that has to be excluded. If it is given by other than government, like NGO or any other trust or some any charitable institution or any other persons, so in such cases, if it is directly linked to the price, that shall be included. If it is not directly included, that shall be excluded. Okay, right. Next we have seen section 15 subsection 3, where we are talking about discount. Discounts we have two types. One is discount at the time of supply, before the time of supply, or at the time of supply, or post supply discount. Whenever it is a case of at the discount at the time of supply, it will be excluded from the value of the supply, provided it is mentioned in the invoice. If it is not mentioned in the invoice, that discount will not be considered. Okay, right. See, if it is post supply discount, then 3 conditions must be satisfied. So in order to exclude such discount from the value, 3 conditions must be satisfied. What are those 3 conditions? First is agreement must be there. It must be prevailing at the time of supply. Second one is it shall be linked to a particular invoice. And third one is ITC claimed by the recipient has to be reversed. So if these 3 conditions are satisfied, then in such cases discount shall be excluded. Okay, so regarding discount, we will have some other discussions here. See here, exclusions of discount from the value, section 15 subsection 3. Okay, right. Discounts given before or at the time of supply are shown in the tax invoice. Example for such discount can be discounts that are offered for making the payment at the time of supply itself. Such discounts are thus recorded in the invoice, and thus GST is charged on the gross value less discount duly recorded in the invoice. Simply product value, generally price will be there, price 50,000 minus discount 10%. Okay, 5,000, 45,000 is the value. 45,000 is the value of the supply. On this GST at the rate of 12%. So likewise it will be calculated if the discount is at the time of supply, before or at the time of supply. Okay, and that too, discount shall be mentioned in the invoice. Okay, right. Next, post supply discounts. That means supply is already over. So later on later on. It is not always commercially feasible to determine all the discounts before or at the time of supply or record them in the invoice. Okay, so for instance, each cash discount given for making the payment within the stipulated time, that means cash discounts or secondary discounts or post supply discounts. Okay, so even though the discount is established before or at the time of supply, discount is established before or at the time of supply, the supplier cannot record such discount in the invoice. So even though we know that this discount has to be given at a later point of time, but still it cannot be mentioned now. Okay, right, because it is based on some contingency, as he does not know if the buyer will make the payment within the stipulated time or not. If he is making payment, then only he will be eligible. So that's why, so supplier is not knowing that. So in such cases, likewise in case of quantity, volume, performance, discount also, the supplier is not aware before or at the time of supply as to whether the buyer would purchase the requisite quantity within the stipulated time. Therefore, in this case, all the discount cannot be recorded in the invoice. All the discount cannot be recorded in the invoice. So in such cases, initially GST is paid on gross value. In such cases, initially GST is paid on gross value indicated in the invoice without considering the discount. Okay, so the supplier, however, passes the discount to the buyer subsequently by issuing the credit notes. So whatever adjustment you have to make to the, you have to in order to make it to the invoice, you have to issue debit note or credit note. If you want to increase the value, you have to give debit note. In order to decrease the value or decrease the GST, you have to give credit note. So if you are giving discount, means what you are doing? If you are giving discount, means you are decreasing the value of the supply. You are decreasing the value given in the tax invoice. So now you have to issue credit note. You have to issue credit note. So by issuing the credit note, discount will be given. Okay. So post supply discounts. So the discounts that are given after the supply is made are allowed as a discount, as a deduction from the value of the supply if the following conditions are satisfied. What are those conditions? Discount is in terms of the agreement that are existed at the time of supply and can be worked out in the invoice wise. Okay, so these are two conditions here. So one is agreement. Agreement for such discount is there at the time of supply, plus it is invoice wise. So invoice can be identified. Okay, so next, proportionate input tax credit. So whatever the input tax credit enjoyed by the recipient on such discount amount, the input tax credit has to be reversed by the recipient. So in those cases only the discount will be given us, or value of the supply will be excluded. Discount will be excluded from the value of the supply, right? So here you see discount at the time of supply or before the supply shown in the invoice, then discount deducted from the value. Okay, so at the time of supply, or see, if the discount is after supply, in terms of the agreement that existed at or before the time of supply, can be linked to the relevant invoices, proportionate ITC reversed by the recipient. Proportionate ITC reversed by the recipient. In such cases, discounts not to be, see, if it is yes, then discount deducted from the value of the supply. If it is no, discounts not to be deducted from the value of the supply. Okay, see, of all the cumulative conditions, if all these three conditions satisfied, then discount deducted from the value of the supply. If any of these condition failed, so discount not to be deducted from the value of the supply. So this is about discounts. See here, so we have different types of discounts. Through a circular, we have a clarification here. Staggered discounts. Staggered discounts means, so this is most common discounts you will find in the shopping malls. Like buy one get one offer may be there. Okay, so if you are buying more, you will get more discount. Likewise, if you shop for 5,000 rupees, 1,000 rupees will be a discount. If you shop for 10,000 rupees, 2,500 will be the discount. So likewise, they will increase the rate of discount. Okay, 20% for 5,000. 10,000 if you make 30% or 25%, they will be given as a discount. So if that discount, staggered discounts, in case staggered discounts, rate of discount increases with increase in the purchase volume. Okay, if the volume of the purchase is increased, discount will be increased. So those discounts will be excluded to determine the value of the supply. Those discounts are allowed. That is also at the time of supply only. So those discounts are allowed. Hence, while determining the value of the supply, those are to be excluded. Next, periodic year-ending discounts, volume discounts. So volume discounts will be given generally in case of B2B supplies. Generally in case of B2B supplies. Okay. So when a wholesaler or retailer is purchasing from a manufacturer, manufacturer is giving such a discount, or a wholesaler is offering such a discount to a retailer. So likewise, volume discount will be given. So overall 1% or 2% discount will be given, or additional discount will be given upon satisfying a particular condition. This is prevailing at the time of agreement, at the time of sale or supply, but it shall be linked to a particular invoice, and ITC has to be reversed. If all these conditions are met, then only it will be excluded. So these discounts are offered by the suppliers to their stockists. For example, get additional discount of 1% if you purchase 10,000 pieces. Get additional discount of 2% if you purchase 15,000 pieces. Such discounts are established in terms of agreement entered into it, okay, at or before the time of supply, though not shown on the invoice, as the actual quantum of such discount gets determined after the supply has been effected and generally at the year end. So that means this is there at the time of the supply. So while making the supply only it is known. So in the common trade parlance, such discounts are colloquially referred to as volume discounts. Okay, such discounts are passed on by the supplier through the credit notes. Such discounts are excluded to determine the value of the supply, provided they satisfy the other parameters of section 15 subsection 3. What are the other parameters? ITC has to be reversed, and C, including the reversal of ITC by the recipient as is attributable to discount on the basis of the documents issued by the supplier. What are the documents issued by the supplier? Invoice. Tax invoice is the document issued by the supplier. So if it is linked to the invoice and it is, and a recipient has reversed the input tax credit, in such cases he can exclude such discount from the value. So exclude, how the discount will be adjusted? By issuing a credit note. Secondary discounts. So these are the discounts which are not known at the time of supply or offered after the supply is already over. For example, 10,000 packets of biscuits to B at 10 rupees per pack. Afterwards, A revalues it at rupees 9 per packet. Okay, so revaluation made by the supplier. A issues credit note to B for rupees 1 per packet. In such cases, such discount shall not be excluded. That means it will be included in the value. That means already taken. So as per 10 rupees. On that GST has been paid. So it cannot be changed. Okay, so if at all there is a provision for change, if at all the discount can be excluded, in such cases credit note will be issued. Okay, so Royal Biscuit Company gives a discount of 30% on list price of its distributors. Thus, for a carton of spice biscuit in the tax invoice, the list price is mentioned as 200, on which discount of 30% is given to arrive at the final price of 140. So 200 minus 30%, 140. So value will be 140 only. This is at the time of supply. Okay, so agreement of Raji Electrical Appliances with its dealers is to purchase of rice cookers over 1000 pieces in Diwali month will entitle them to discount of 5% per cooker. Therefore, the quantum of the discount can be determined only at the end of Diwali month. However, since the agreement relating to the discount was in existence at the time of supply and the discount can be worked out for each invoice, such post supply discount shall be allowed as deduction from the value of the rice cookers, but provided two other conditions must be satisfied. Along with GST and claim adjustment of excess tax paid must reverse the proportionate input tax credit. Okay, so Raji Electrical Appliances can issue credit note for a discount of 5% of the value. See, by issuing credit note they can adjust to the value, okay, 5% of the value of the goods along with GST and claim adjustment of excess tax paid. The dealer must reverse the proportionate input tax credit on the relevant stock to bring it in line with the reduced tax. Got it? So this is how discounts will be adjusted. Right, next, see, we have made a discussion with respect to no claim bonus. No claim bonus we have seen. Do you remember the concept? So insurance company will be there, insured will be there. Okay, so insured has taken insurance on a bike or a car or whatever, a general insurance has taken. So he has not claimed anything. He has just paid the premium, not claimed anything. So from the insurance company, next year while paying the premium, the insurance company has offered a discount, which is nothing but no claim bonus. Okay, the discount will be called as no claim bonus. So in the first year he has not claimed anything, that's why in the next year the company has given some discount to the insured person. Okay, so in such cases that will not be treated as consideration. That will not be treated as consideration. No claim bonus will not be treated as consideration because there is no service involved here. So insured person is not giving any service to the insurance company, hence there is no consideration here. See here what they are telling. Since as per section 15(3) subsection 15(3) clause A, the value of the supply shall not include any discount which is given before or at the time of supply if such discount has been duly recorded in the invoice of such supply. It is therefore claimed that no claim bonus is permissible deduction under the said supply for the purpose of calculation of the value of the supply of insurance services provided by the insurance company to the insured. See here, insurance company is there, insured is there, so he is paying premium. He is paying premium. On the premium, just a minute. Yes, on the premium GST will be applied. Okay, so this is the first year. Next year what had happened? Premium is 90,000. Why it is 90,000? 10,000 rupees, no claim bonus offered. Why it is offered? In the first year premium is 1 lakh rupee. Okay, he has not claimed premium paid, but he has not claimed anything. Hence the insurance company is giving a discount of 10%, which is named as no claim bonus. Okay, so 90,000 is the premium. So now 1 lakh is the value price minus 10% discount or no claim bonus. Okay, 10,000. So which will be 90,000. Now the value of the supply will be 90,000. That means no claim bonus given by the insurance company will be excluded from the value of the supply as a discount at the time of supply, since it is a discount at the time of supply. Okay, so in that what we call in the supply chapter only we have studied that while reading this definition of consideration, no claim bonus has been studied. So in a different way we have studied there. What is that? From the point of view of the insured, no claim bonus he is getting. Okay, so no claim bonus. Why he is getting no claim bonus? For not claiming insurance he is getting bonus. For not doing something he is getting bonus, no? So that will be treated as supply. Is the question there? First of all, it is not a supply. How it is not a supply? There is no such contract prevailing between the insured and the insurance company, that he is not going to claim karke, there is no such contract. So in order to indemnify himself, he has taken the insurance. Later point of time, whenever there is a necessity for small scratches and all, he is not claiming. So whenever there is a major accident, where there is a major damage to the product or damage to the asset, then he will obviously claim the insurance. So there is no such contract between the insurance company and the insured. There is no such agreement. Hence there is no supply there. Here what is there? Here insurance company is giving services to insured. Consideration is the premium here. Value is the premium here. Out of such value there is a discount. From the point of view of the insurance company, 10% discount has been given to the customer who is the insured person. So that discount is there, no? That will be excluded from the price as per section 15 subsection 3 clause A. Clause A itself. 15(3) clause A only. It is discount at the time of supply only, no? It is not the discount post supply. It is the discount at the time of supply. Right. Next, see here, supplies where the value cannot be determined as per 15(1). 15(1). So 15(1) means two conditions. What are that? What are those? Price is the sole consideration, must be between the unrelated persons. So if it is between related person or price is not the sole consideration, then 15(1) is not applicable. What will be applicable? Rules will be applicable. It will be determined as per the Okay, so that is what is given in section 15 subsection 4 and subsection 5. See here, we have studied 15.3 and 4, 15 up to 15.3, right? Where the value of the supply of the goods or services or both cannot be determined as per subsection 1. As per subsection 1, the same shall be determined in such manner as may be prescribed. As may be prescribed. Wherever the word prescribed comes, rules come into picture. Wherever the word prescribed comes, rules come into picture. Okay, as per the rules, it will be determined. So whenever it is not possible to determine the value of the supply as per subsection 1, when it is not possible, when price is not the sole consideration, or it is not made between the unrelated persons, that means it is made between the related persons, or price is not the sole consideration, then in such cases it cannot be determined as per section 15 subsection 1. Then in such cases, which will come as per 15 subsection 4, rules will be applicable. CGST rules will be applicable to determine the value of the supply. So notwithstanding anything contained in subsection 1 or subsection 4, the value of such supplies as may be notified by the government on the recommendations of the council shall be determined in such a manner as may be prescribed. So government will determine. Okay, see, this is what is subsection 4 and subsection 5. So where the value of the supply will not be determined as per section 15 subsection 1, it will be determined otherwise as per the rules. Okay, so section 15.4 lays down that where subsection 1 is not applicable, if the transaction if the transaction is with a related party or the price is not the sole consideration for the supply, then the value will be determined in the manner as prescribed, which means as stipulated in the rules for valuation. Okay, so further 15.5 lays down that in respect of certain notified supplies, value will be determined in the manner stipulated in the rules for valuation. Okay, so which will be discussed at the final level. Got this? Okay, so this is all about the provisions of value of supply. Just 3 subsections, 15.1, 15.2, 15.3. That's all. 15.1, transaction value is the value of supply. At what price the transaction is happening, that is what the value of supply. But 2 conditions. Consideration must be only the price, only the cash consideration. Next, must be between unrelated persons. Buyer and recipient and the supplier shall not be related persons. If these 2 conditions are satisfied, transaction value is the value of supply. Next, 15.2, what shall be included in the value? 15.3, what shall be excluded from the value? 15.2, what shall be included? All the taxes shall be included excluding GST. Next, 15.2b, what shall be included? Any payment made by the supplier made by the recipient on behalf of the supplier, where supplier is obliged to pay, that has to be included. Incidental expenses like packing, commission, weighment charges, testing charges shall be included. Interest, late fees, penalty for delayed payment has to be included. Okay, next, subsidies other than given by the government or which are directly linked to the price, they shall be included. These are the inclusions. What shall be excluded? Discount shall be excluded. When the discount shall be excluded? Discounts issued at the time of supply or before the time of supply will be excluded. Discounts issued post supply will be excluded provided 3 conditions are satisfied. One is agreement shall be there. That means discount shall be there in the terms and conditions at the time of supply. Next point, it shall be linked to a particular invoice. Bill shall be identified. Next point, ITC shall be reversed. If these conditions are satisfied, then discount shall be excluded from the value. That's all. Determination of the value is our main thing here. Okay, right. So we will see one illustration here. So the remaining all the problematic part. So we can expect a question from this. We can expect a numerical question from this. So Black and White Private Limited. See the page number 7.24. Black and White Private Limited has provided the following particulars relating to goods sold by it to a Colorful Private Limited. Okay, Black and White Private Limited provided the following particulars relating to goods sold by it to Colorful Private Limited. Okay. Okay, goods sold by it to Colorful Private Limited. List price of the goods exclusive of taxes and discounts. List price, okay, of the goods exclusive of taxes and discounts 50,000. Taxes levied by municipal authority on sale of such goods is 5,000. Packing charges not included in the price above 1,000 rupees. Okay, Black and White Private Limited received 2,000 as price linked subsidy from an NGO on sale of such goods. On sale of such goods, the price of 50,000 of the goods is after considering such subsidy. After considering such subsidy, Black and White Limited offers 2% discount on the list price of the goods, which is recorded in the invoice for the goods. Determine the value of the taxable supply by Black and White Private Limited. So you tell me, what is the value? What is the value? $57,000. Okay, one answer is 57,000. Other answers? $57. 57. That is there as answer in the next page. Right. Okay, this 50,000 has to be taken. First, list price has to be taken. Correct up? List price. Next, taxes levied by municipal authority has to be taken. Why? As per section 15 2 clause A. 15(2)(a), all the taxes shall be included, excluding GST. Municipal tax included 5,000. Okay, next, packing charges included to be included as per section 15(2)(c). Okay, plus 1,000 rupees. Next, received 2,000 price linked subsidy included. See, they are telling that it is price, this list prices after considering such subsidy. After considering subsidy means what they have done already. After considering subsidy means what they have done already. So 52,000 is the list price minus 2,000 subsidy they have done. So then they made it as 50,000. Okay, so now that has to be added back. So 2,000 subsidy to be included. Okay, next they have given a discount of 2%. Discount on which price? List price. 2% on list price means 1,000 rupees. Okay, so 50, 55, 56, 58 minus 1,000, 57,000 is the value of supply. Okay. See here how they have presented. See, everywhere they have written the clauses. Okay. Supporting provision for such adjustment is being written there. So that has to be written. So even though your answer is correct, if you are not writing these notes, if you are not writing these notes means you cannot expect marks. So the provision, supporting provision is very much important. Even if you are doing a smaller adjustment also, you are doing +1 or -1, you are multiplying or whatever it may be. So why you are doing that? What is the supporting provision for that? What is the supporting section, subsection, clause for that? Has to be written there. So you have to remember the sections also. You have to remember. So you make it as a habit. It is very much important. At final level is very much essential. Here also it is essential in order to get score good marks. But whenever you have a doubt with respect to the section, you don't mention the section. Okay, so let's say you are having a doubt about the clause. So you know section, subsection, section you know, 15 subsection 2 you know. Okay, but you don't know A, B or C. In such cases, you don't write this clause. If you are confident with this 15 subsection 2, you just write this. If you are not even confident about the subsection, then you don't mention the subsection. You can write section 15. You can write section 15. So whenever you are putting a wrong clause, so instead of A you are putting B, means even though you are writing it as correct, that provision may be correct, calculation may be correct, but whenever you are quoting a wrong section, no, so you are gone. Okay, so that's why, so whenever you are having a doubt with respect to a particular section, subsection or a clause, you don't mention that clause. So instead of writing the clause, you may mention the subsection. Instead of writing the subsection, you may mention the section, but don't put wrong section, wrong subsection or wrong clause. So up to where you are confident, that only you have to keep. Okay, so otherwise you don't put. But putting the clauses or mentioning the sections are very much important, in order to grab good marks. Okay, right. And at the same time, supporting provisions has to be written for each and every adjustment. Supporting provisions must be there. Okay, whether you write in the answer itself or a separate working notes may be maintained. Okay, so you can make the calculation here, and the supporting working notes, note points 1 2 3 4 point can be mentioned there. Okay, and that reference has to be given, like if this is the first adjustment, so for with respect to this first adjustment in working notes or notes, with respect to first adjustment, the notes will be there, no, the same number has to be continued there. So which number notes is applicable to this point, that has to be quoted here, working note 1 or notes 1. So that has to be quoted here. So that's how you should present the answer. If you are not presenting the provisions, if you are not mentioning the sections, you cannot expect good marks. Okay, even though your answer is correct, your calculation is correct, you cannot expect good marks. So the provisions must be mentioned. At least provisions must be mentioned. Forget about the sections, at least provisions. Later on you can practice sections, section numbers, subsection numbers along with clauses. Right. Okay, list price of the goods given exclusive of taxes 50,000. Taxes levied by municipal authorities has been added. Packing charges added. See the section 15.2c. Here 15.2e, non-government body subsidy has been given, and that too price linked subsidy 2,000 added, total 58,000, in that discount minus. Okay, 1,000 rupees, total 52,000. Next we have illustration 2. Samriddhi advertisers on, what is this? Conceptualized and designed the advertising campaign for a new product launched by New Moon Private Limited. So who is giving service to whom? Samriddhi Advertisers is a supplier giving services to New Moon Private Limited is the recipient. Okay, for a consideration of how much? Advertisement service. Okay, 5 lakhs is the consideration. For a consideration of 5 lakhs. Samriddhi Advertisers owed how much? 20,000 to one of its vendors in relation to advertising service provided by it a New Moon Private Limited. That means Samriddhi Advertisers has to pay 20,000 to some third party. Okay, right. Such liability of Samriddhi Advertisers was discharged by New Moon Private Limited. So 20,000 has to be paid by Samriddhi Advertisers, but has been paid by New Moon. It has to be paid by supplier, but paid by recipient. Okay. Paid by New Moon Private Limited delayed the payment of consideration and thus paid 15,000 as interest. So payment delayed. So that's why 15,000 interest they have paid. So assume the rate of GST to be 18%. Determine the value of taxable supply. You do it. Okay. Tell me what is the service charge, what is the consideration? 5 lakhs. Correct? Okay. So next transaction 20,000. What is that? Who has to pay that? Supplier has to pay. But who has paid that? Who has to pay? Supplier. Who has paid? Recipient has paid. So as per section 12 subsection, sorry, section 15 subsection 2 clause B, anything paid by the recipient, okay, which shall be paid by the supplier, that has to be included. So 20,000 to be included. Correct? Okay. Next, consideration delayed. That's why consideration delayed. That's why what they have made, they charged interest of 15,000 rupees. Correct? So this interest amount is 15,000. Interest is inclusive of GST. Okay. Into 100 divided by 118. How much? 14,700. 12,000. 712. Okay. So now 5,32,712 will be the value of supply. So here the exemption is interest 15,000 rupees. 15,000 rupees is inclusive of GST. Is the exemption here that you have to mention. So if it is assumed that it is exclusive of GST, means directly you can add that 15,000. 5,20,000 plus 15. 5,35,000. Okay, right. So it is also possible to assume, see here, 12,712, just like that. Okay, so inclusive of GST we have taken. So it is also possible to assume that interest to be exclusive of GST. Then in such cases 5,35,000 rupees will be the amount of value of supply. Correct? Okay. Okay. Right, value of taxable supply under section 15, whether the price is the sole consideration for supply. If yes, supplier and the recipient are related. If no, then the supply is notified under section 15(5). No, then value of the supply is equals to transaction value. Okay, plus 15(2) elements. 15(2) elements means taxes other than GST, amounts paid by the recipient, incidental expenses, subsidy given directly linked to the price but not given by the government. Okay, so but all these has to be included and excluding discount as per section 15(3). So if price is not the sole consideration, or if supplier and recipient are related persons, or it is notified supply as per section 15(5), then in such cases, as per valuation rules given under CGST rules 2017, so value has to be determined. Okay, right. Now comes the questions part. Are the post supply discounts eligible for deduction from the value of supplies in all situations? No. Post supply discounts. What are the conditions? 3 conditions are okati, first condition. First condition, agreed. Okay, second condition, invoice. Third condition, ITC reversal. Correct. Next, consideration under GST law includes both monetary and non-monetary consideration. Correct? Consideration under GST law includes both monetary and non-monetary considerations. Correct? Wrong? Correct or wrong? Correct only, no? No, we no need to go there. Consideration definition itself is saying no. Consideration, it is not just the so even we have a quotation also on this. Consideration, cash or kind, GST does not mind. Cash or kind, GST does not mind. Okay, right. So discuss the correctness or otherwise of the statement with reference to the definition of the term consideration provided under CGST Act. Okay, so discuss the correctness or otherwise of the statement with reference to the definition of the term consideration provided under CGST Act. So consideration, we have a definition, right? Consideration. So what is that? To act, to do one act, or to forbearance to do an act, all will comes under the consideration definition. So if any deposit is made and the deposit is applied as a consideration, then only it will be called as a consideration. So likewise, we have seen the definition of consideration. Okay. Next, Sharp Minds Institute provides coaching for engineering entrance examination. Okay. The monthly fees charged by the institute from a student is 10,000. Monthly fees. The institute is known for its commitment to provide education to underprivileged children. It trains 10 students every year for entrance examination free of cost. Okay, so it generally charges 10K per month. Okay, but for 10 students, they will offer free course or offer free coaching. Okay, so institute has received 3 lakhs as a coaching fees during a month. Okay, so that means for 30 students. Navjeevan, an NGO working in the area of education for underprivileged children, has given a subsidy of 10,000 in lump sum during the month to the institute, as it is serving the cause for underprivileged children. Okay, you are understanding this point? So generally, see, this Sharp Minds Institute is also doing some charity. What is that? They are training 10 students free of cost. That's why they are doing some charity. In that way, they are doing some charity. So that's why an NGO is helping Sharp Minds. Okay, so that's why they donated 10,000 rupees in lump sum to them. So determine the value of supply of education services made by Sharp Minds Institute during the month. So value of the supply. What is the value of supply? Which clause has to be taken? Which clause? 15? 15(2) clause E. Correct? Where we are talking about subsidy. In subsidy, we have 2 classifications: from government, from others. If it is from others, we have 2 classifications: linked to price, not linked to price. If it is linked to price, included in the value. That means value plus subsidy. If it is not linked to price, it need not be considered. Okay, so what had happened here? Is it linked to price or lump sum? If it is linked to price or lump sum, it is not linked to price. They are not giving discount for each and every student, like 10,000 is the value of the course for every month. They are not telling that for every student you just give a discount of 1,000 rupees or 2,000 rupees, like that they are not giving, or 10% discount karke they are not giving. So here they are giving 10,000 rupees lump sum discount. In such cases, you need not consider that donation amount. Okay, so what will be the value here? Value of supply will be just 3 lakhs. That's all. Okay, 3 lakhs will be the value. Next, Furniture Wala is a chain of retail showrooms. Furniture Wala is a chain of retail showrooms selling both modern and classic furniture. Modern and vintage. Okay, so in order to build strong customer association, the showroom provides a free delivery of the furniture at the premises of the customers if distance between the showroom and the customer premises is up to 20 kilometers. Okay, so customer premises showroom distance will be 20 kilometers, means they are offering free delivery. So where the distance is more than 20 kilometers, the showroom charges concessional freight of 10 for every additional kilometer. 10 rupees for every additional kilometers. So Miss Leena Kapoor purchases a double bed, dressing table and center table for 2 lakhs from Furniture Wala. Miss Leena gets a free delivery of the furniture as her residence is located at a distance of 18 kilometers, that is within 20 kilometers from showroom. The showroom incurs an expenditure of 1,000 rupees for delivering the furniture at Miss Leena's residence. Determine the value of taxable supply made by Furniture Wala. Will your answer change if residence of Leena is 50 kilometers away from the showroom? Understand the question? Okay, so you solve it now. Okay, this comes under which clause? This comes under which clause? 15 to C, incidental expenses. So if the incidental expenses are made by the supplier, added to the value. Okay, if the incidental expenses are not there, it will not be there. See, in the first case, incidental expenses are there. The residence is 18 kilometers away from the supplier's place. So which is free of cost. That means he is not charging anything. So that's why just the value will be the price. Which is 2 lakhs, huh? Which is 2 lakhs. 2 lakhs only, no? Which is 2 lakhs. If it is 50 kilometers away from the residence, then for first 20 kilometers, there will not be any charge. For remaining 30 kilometers, there will be a charge of 10 rupees per kilometer. Then it will be 300 rupees freight charges. Freight charges will be added to the value. Why? It is an incidental expense, delivery cost. Delivery is an incidental expense as per section 15 subsection 2 clause C. Delivery charges, incidental expenses has to be added to the value. So that's why value will be 2 lakh 300 rupees. Okay, right. Next question is fifth one. AKJ Foods Private Limited gets an order for supply of processed food from a customer. The customer wants the consignment tested for gluten. Okay, and specified chemical residues. Okay, testing. They want testing, not just the processed food items. They want the testing of the items. Okay, so how much gluten is there? So AKJ Foods Private Limited does the testing before the supply and charges a testing fees for the same from the customer. Testing is done, charging testing charges. AKJ Foods Private Limited argues that such testing fees should not form part of the consideration for the supply as it is a separate activity. Okay, so just tell me, in light of section 15, what section will be attracted? 15 subsection 2 clause C, incidental expense. So testing charges are incidental expenses, so that shall be added to the value of supply. Okay, next, Mazda Banners, an advertisement firm, gives its customers an interest-free credit period of 30 days for payment. Okay, so this is a service supplier giving credit of 30 days for payment. Its customer ABC paid for supply 32 days after the supply of service. That means 2 days delay. Mazda Banners waive the interest payable for a delay of 2 days. Why would the interest payable for a delay of 2 days? Department wants to add the interest for 2 days to the value of the supply. Should notional interest be included in the value? Is the question. Notional interest be added to the value is the question here. So 2 days interest has been waived off. 2 days interest has been waived off. Notional interest be excluded, included. Okay, that has to be taken. That has to be seen. Question 5 or 6? 6. Which section will come here? Section 15 subsection 2. Section 15 subsection 2. Clause B, D, interest, late fees, penalty. Interest, late fees, penalty will be taken, will be added to the value of the supply, provided interest is charged. If something is coming as a consideration to us, then only on that amount we have to pay GST. Price shall be the sole consideration, right? So if price is the consideration and if you are receiving such consideration, on such price GST has to be paid. See, if 1 lakh is the value of the product, you are receiving just 1000 rupees. On this 1000 rupees only you will pay GST. On this 1000 only you will pay GST. But two conditions needs to be satisfied. Only 1000 is the consideration. No other consideration. No other consideration in kind. Next, it is a transaction between unrelated person. If these two conditions are satisfied, then only 1000 rupees will be the value. Even though that is worth 1 lakh, but transaction value will be the value of supply. So here interest they are not charging only. Whenever they are charging interest and collecting interest, in that GST will be shared. GST portion will be paid. If they are not charging interest, how they will pay? That will not be included in the value. Okay. See here. This is a supply that is valued as per transaction value. As the price is the sole consideration for supply and supply is made to unrelated person. Value of supply includes interest for delayed payment of consideration for any supply. This is correct as per section 15 subsection 2 clause D. Okay. So however the time of supply to the extent it relates to an addition in the value of the supply by way of interest. Okay. By way of interest for delayed payment of any consideration is the date on which the supplier receives such addition in value. Okay. So what they are talking about, time of supply. Time of supply means time of supply that we will see in the next coming chapter. So time of supply means the point of time in which we have to pay GST is when we are receiving the consideration, when we are receiving the interest. It is not when we are supplying the goods or when we are supplying the services. It is when with respect to interest, when you are receiving the interest, then only you will pay GST. Okay. So in the given case, the supplier has waived the interest for delayed payment. Consequently, the supplier had not received the interest. If the supplier had not received the interest, obviously he will not pay GST. See, supply without consideration is different. This is interest part. Supply without consideration is different. So without consideration, and that too it is falling under schedule 1. 4 clauses are there. If that is falling under schedule 1, 4 clauses out of which if one clause is satisfied. In such cases, supply without consideration, of course it will be. See, interest, we are receiving interest. Why we are receiving interest? For delayed payment. That means we are tolerating the delay by accepting the interest. So our toleration of the delay is a service. That's why we are receiving interest as a consideration. It is a supply. On that we are paying GST. See, we are tolerating delay. We are not charging interest. That means we are supplying without consideration. But schedule 1 will come here. Schedule 1 will come here. You have to check. Schedule 1 will come here. First clause. What is the first clause? First para. Schedule 1. First para. Transfer of business assets on which input tax credit has been taken. Second point. So in this point it will come interest. Interest will come. This will not come. Second part, related person, distinct person. Not the case. Third part, third para, agent to principal, principal to agent. It will not come. Fourth part, importation of services. Nowhere it is coming. Then it will be a supplier. It will not be a supply. It will not be a supply, first of all. Why it is not a supply? Consideration is missing. Consideration is missing. If there is a consideration, then it will be a supply. How it will be a supply? What is the service here? Consideration is clearly evident. What is that? Interest part. Interest part. What is the service here? Accepting the delayed payment, tolerating the delay is a service. For that service you are getting interest as the consideration. Such interest will form part of the value that has to be added to the value on that GST will be charged. If there is no consideration, if there is no interest charged, then there will not be any GST because it does not comes under supply only. You got this point? Right. Next. Okay, next question 7. Question 7. Crunch Bakery Products Limited. Bakery Products Limited sells biscuits and cakes through its dealers, to whom it charges the list price minus standard discount and pays GST accordingly. When the goods remain unsold with the dealers, it offers the additional discounts on the stock as an incentive to push the sales, without any prior agreement between them for offering such additional discount. Which clause, which section? Section 15, subsection 3, where we talk about discounts. This is discount at the time of supply or discount after the supply. What is that? After the supply. After the supply means how many conditions? 3 conditions. What are those conditions? So agreement is there, it is not there. That's why. So it will not be excluded from the value. It will not be excluded from the value. Okay. Next, Red Pepper Limited, Delhi, a registered supplier, manufactures taxable goods. It provides the following details of the taxable interstate supply made by it during the month of March. In the month of March, they made this. Okay. List price of the taxable goods supplied interstate, exclusive of taxes, is 15 lakhs. List price. Price linked subsidy received from the central government for supply of the taxable goods to the government school, exclusively relating to supply of goods included at serial number 1. Exclusively related to supply of goods included in serial number 1. Serial number 1 is list price. Okay, 2,10,000. 2,10,000. Got it? Okay. So list price of the taxable goods is given 15 lakhs. Price linked to subsidy received from central government for supply of taxable goods to the government school, exclusively related to supply of goods included at serial number 1 is 2,10,000. Got this? Right. Now the third point, price linked subsidy received from an NGO for supply of taxable goods to an old age home, exclusively related to supply of goods included at serial number 1. Okay. Right. 50,000 rupees. Price linked subsidy received from NGO for supply of taxable goods to an old age home. Okay. So here what is given? Price linked subsidy received from central government for supply of taxable goods to government school. Next, taxes levied by municipal authority 20,000, packing charges 15,000, late fees paid by the recipient of the supply for delayed payment of consideration. Recipient has agreed to pay 6,000 rupees in lump sum and no additional amount is payable by him over and above such amount. 6,000 rupees. Okay, right. The list price of the goods is net of the 2 subsidies received. That means after excluding those 2 subsidies, the list price is 15 lakhs. However, other charges, taxes, fees are charged to the customer over and above the list price. Calculate the total value of the taxable supplies made by Red Pepper Limited during the month of March. Rate of GST is 18%. Solve the question. This is examination standard question only. Examination standard question only. Done. Okay. So what is the price of the goods? 15 lakhs. Okay. Right. Next 2 subsidies are there. One is from central government, another one is from NGO. So subsidy received from central government means that has to be excluded. Okay. They have already excluded. So any treatment required? No. So subsidy received from NGO is to be included, but what they have done? Exclude. That's why what to do? Include, add back. Okay. Next, taxes levied by municipal authorities. add. Okay, packing charges, adds. Okay, next late fees to be added. So 6,000 rupees is there, inclusive of GST. Inclusive of GST, there is no scope for exemption also. Why there is no scope for exemption? They are already telling that only 6,000 rupees is paid. Only 6,000 rupees is paid. They agreed to pay the lump sum of 6,000 rupees. That means it includes GST also. There is no scope for other exemption also. So 6,000 into 100 by 118. Okay, 5085. 15,000. You just name the clauses. List price is there 15 lakhs as per section 15 subsection 1. Okay, next 15 subsection 2 clause E subsidy. Next 15(2)(e). Next municipal taxes 15(2)(a). Next incidental expenses 15(2)(c). Next 15(2)(d). Late fees, interest, penalty. Okay, so this will be the value. Okay, right, next, Miss FlowPro, a registered supplier, sold a machine to BP Limited. FlowPro, a registered supplier, sold a machine to BP Limited. It provides the following information in this regard. Okay, so price of the machine excluding taxes and other charges mentioned at serial number 2 and 3 is 25,000. So without considering 2 and 3. Third party inspection charges 5,000. So charges were payable by FlowPro, but the same have been directly paid by BP Limited to the inspection agency. The charges were not recorded in the invoices by FlowPro. 5,000. Freight charges for delivery of the machine is 2,000 rupees. FlowPro has agreed to deliver the goods to BP Limited premises. Okay, freight charges for delivery of the machine 2,000 rupees. So FlowPro has agreed to deliver the goods. Okay, 2,000 rupees. Next, other points are there. Subsidy received from state government on sale of machine under skill development program 5,000 rupees. Subsidy is directly linked to the price. Discount of 2% is offered to BP Limited on price mentioned at serial number 1 and recorded in the invoice. Price of the machine is net of subsidy received. Determine the value of the taxable supply made by FlowPro to BP Limited. $31,000. How you are getting? 25,000. 25,000 anyway has to be taken. Third party inspection charges. Actually to be payable by inspection charges. Which clause will come? Which clause will come? 15(2)(c) will come. Incidental. Incidental expenses. But if it is the liability of a supplier but paid by the recipient, the same has been directly paid by BP Limited but not mentioned in the invoice by FlowPro. In such cases it will comes under which clause? 15(2)(b). 15(2)(b). So as for 15(2)(b) it has to be added, but clause will be changed as for 15(2)(b). And next, freight charges for delivery of the machine. Freight charges for the delivery of the machine. Okay, so this is incidental. Incidental as per section 15(2)(c) or 15(2)(b). Freight charges 15(2)(b) or 15(2)(c). Which clause? 15 to B only. Why? The freight charges has to be incurred by FlowPro. As per the agreement, they have to incur. But who has paid? Freight charges for delivery of the machine 2000. Okay. So this has to be included. 2000 rupees has to be included. Okay. Next. Subsidy received from the wait. This 2000 has to, what is the treatment for this 2000? Huh? Why? As per which clause? 15? 15 to A. Yeah, taxes. 15 to A is taxes. Freight charges for delivery of the machine. FlowPro has agreed to deliver the goods at B Limited's premises. 15 to B, 15 to C, 15 to C, incidental expenses, incidental expenses. Okay, we'll check. Next, subsidy received from the state government on sale of machine under skill development program. This will be included or excluded? Excluded. Okay, need not be considered. Next, subsidy is directly linked to price. Net of subsidy they have taken. So that's why 5000, no need to get any treatment. Okay. Next, discount of 2% is offered to B Limited on price mentioned in serial number 1. So 2% on what amount? 25,000. How much? 500. Okay, na? Right. So how much to be taken now? 25,000. What is your answer? What you are telling? 25,000 plus 5,000 plus 2,000. Plus 2,000. Okay, 32 plus 32 minus 500. 31, 500 you are telling. Okay. Right. Question 9. See this inspection charges 5,000, but clause is 15 to B. Next, freight charges 2,000. Clause is 15 to C. Okay, this 25,000 price of the machine, subsidy 15 to E. Subsidy has not been included, and section 15 subsection 1 also. Right. Next, discount 15 to 15.3 clause A. Discount at the time of supply. So minus 5,000. So 51. Okay. Right. Next, question 10. Sri Krishna Private Limited, registered supplier, furnishes the following information relating to goods sold by it to Sri Balram Private Limited. Okay, Krishna to Balram. Now, price of the goods excluding taxes and other charges. Price of the goods excluding taxes and other charges mentioned at serial number 3, 5 and 6. Okay, 1 lakh. Municipal tax 2,000. Inspection charges 15,000. Excluding taxes and other charges. Okay. Subsidy received from Shriram Trust. Subsidy is linked to price of the goods supplied 50,000. Late fees for delayed payment inclusive of GST 1,000 rupees. Sri Balram Private Limited paid the late fees. However, these charges were ultimately waived by Sri Krishna Private Limited. The amount was refunded to Sri Balram Private Limited during the same month, 1,000 rupees. Okay, waivement charges. Such charges were paid by Sri Balram Private Limited to Radhe Private Limited on behalf of Sri Krishna Private Limited, 2,000 rupees. Waivement charges. Next, price of the goods is net of subsidy received. Determine the value of the taxable supply by Sri Krishna Private Limited to Sri Balram Private Limited. Solve the question. 1 lakh. How municipal taxes to be taken up? 2000. Inspection charges, incidental. Subsidy received from Sri Ram Trust will be added as subtracted. Price of the goods is net of subsidy. That's why you have to add it back. Okay. Next, late fees inclusive of GST. Late fees we will not take into consideration. Why? It is waived off. Waived off and refunded. Okay. Next, payment charges. Incidental. Payment charges 2000 rupees to be added. Any discount is there? Okay. Municipal taxes 15 to A. Inspection charges 15 to C. Subsidy 15 to E. Late fees 15 to D. But not included because it is waived off. If it is received, then only we will include. Payment charges 15 to C or B. Payment charges are generally 15 to C. But on behalf of the supplier, if the recipient is paying, then 15 to B. So here the payment charges are being paid by recipient to the third party on behalf of the supplier. So that's why 15 to B. Okay. So the value is 1,69,000. Next, computation of value of taxable supply with respect to question 11. Kohli Limited, a registered supplier, has supplied machinery to Giza Limited, a supplier registered in the same state. It provides following particulars regarding the same. Okay. Price of the machinery exclusive of taxes and discounts is 5,50,000. Part fitted in the machinery at the premises of Giza Limited 20,000. Okay. Comes under 15 to B, C. Amount has been paid by Giza Limited directly to the supplier. However, it was Kohli Limited's liability to pay the said amount. The said amount has not been recorded in the invoice issued by Kohli Limited. Then 15 to B. Installation and testing charges for machinery not included in the price. 15 to C. Okay. Next, discount at the rate of 2% on price of the machinery mentioned at serial number 1 above, recorded in the invoice. Okay. 2% on the price. 1100. Sorry, 11,000. 11,000. Okay. Next, Kohli Limited provides additional discount of 1% at the year end based on additional purchase of other machinery, for which adjustment is to be made at the end of the financial year without any change in the individual transactions. There is no change to the individual transactions means it is not linked to invoice. It is not linked to a particular bill. So then it has to be considered so determine the value of the taxable supply. 5,50,000, 20, 25. All that has to be added minus. Okay. How much you are getting? Okay. Okay. Right. In this chapter, just a small discussion with respect to section 15, subsection 1, 2, 3. Its main discussions are transaction value. Next, supply includes, value includes, value excludes. Value includes taxes other than GST. Next, payment made to third party by recipient on behalf of supplier. Third, incidental expenses. 4, interest delayed payments, late fees, penalties. And 5, subsidies by other than government and link it to price. Then only it will be included. What will be excluded? Discounts. Discounts at the time of supply or before the supply will be excluded. Discount after the supply will be excluded provided three conditions are satisfied. Which is agreed at the time of supply. Next, which is directly linked to the invoice, and lastly, ITC has been reversed by the recipient. If these conditions are satisfied, then it will be. Okay, based on these questions will be there. Must be compulsorily a question shall be from this area, from this chapter, value of supply. Okay, maybe for 5 marks.